Today, we're going to unpack what is arguably one of the most important economic stories playing out right now in the Indo-Pacific, and that's the incredible acceleration of the Australia-India partnership. We're going to look at the data, the key drivers, and the strategic road ahead to what is a very ambitious goal. So let's dive into the evidence. You know, what we're seeing here is so much more than just a simple uptick in trade figures. It's really a fundamental, structural deepening of the relationship between two of the region's most important democracies. And this isn't just happening by chance, no. It's the direct result of deliberate policy and a really powerful shared vision for the future. And this is the number that sits right at the heart of that vision. $100 billion in two-way trade. It's a hugely ambitious target, for sure, but it really sets the scale for the cooperation and signals just how high the stakes are for both Australia and India. Okay, so how exactly is this transformation taking shape on the ground? Well, the data tells a really clear and, frankly, a very compelling story of accelerated growth. And these two charts, side by side, they just illustrate the momentum perfectly. On the left, you've got Australia's exports to India, and on the right, India's exports to Australia. Just look at that sharp incline from 2022 onward. The key takeaway here is that this isn't a one-way street. It's a story of powerful, symmetrical growth, and it's been supercharged by that landmark ECTA trade agreement. Let's put a hard number on it. Total bilateral trade has already hit nearly $50 billion. Now, to put that in perspective, that's a staggering 43% jump in just a few years. It means we're already about halfway to that $100 billion goal, which just goes to show how quickly this partnership is maturing. So you've got to ask, what's really driving this incredible growth? Well, at its core, there is one key catalyst: the Australia-India Economic Cooperation and Trade Agreement, or as you'll hear it called, AI-ECTA. Now, what's so fascinating about this slide is the context it gives us. In just 2 short years, AI-ECTA has driven a 24% rise in bilateral trade. Now, compare that to some of Australia's other major free trade agreements. It's already outperforming deals that have been in place for nearly a decade. This is without a doubt an exceptional early success story. So, what are we actually trading? Well, for Australia, mineral products are still the dominant export to India. No surprise there. But if you look a little closer at the chart, you start to see real, meaningful growth in some of those value-added sectors, like agriculture and chemicals. So this isn't just about finding new markets. It's the beginning of a really crucial diversification that's going to make the trade relationship more resilient. Now let's compare that to India's export profile to Australia, which, as you can see, is already remarkably diverse. Yes, mineral products are significant, but they're followed closely by high-value categories like machinery, textiles, and chemicals. What this really demonstrates is India's growing strength as a sophisticated manufacturing and services hub, one that's capable of competing across a whole range of global value chains. The impact of cutting tariffs under ECTA is just dramatic when you drill down into specific products. I mean, for Australian exporters, raw cotton shipments have exploded by nearly 3,000%. Pulses, footwear, they're also seeing these incredible gains. This right here is what market access looks like in practice. And the story is just as compelling when you look at it from India's perspective. Exports of high-value manufactured goods are absolutely surging. Parts for railways are up over 800%, automobiles nearly 300%. The crucial point here is that this agreement is a real enabler for India to climb up that global value chain. All right, so this impressive growth that we've seen really sets the stage for the next critical question: where do we go from here? So let's pivot a little bit from what's already happened to mapping out the strategic opportunities that are still ahead. And to do that, we can use a pretty simple but very powerful framework. It's called the Market Opportunity Matrix. Basically, it helps us pinpoint where to invest for future growth by mapping sectors based on how much market share they have now versus how much potential they have to grow in the future. So for Australia, this matrix is really illuminating. You've got your growth champions, things like education and wool, which are already well established. But the next wave, the real excitement, lies in that star opportunities quadrant. We're talking about lithium, green hydrogen, and processed foods. These are high-potential areas where Australia can really build a first-mover advantage. And for India, the picture is just as strategic. You've got established growth champions like IT services and textiles that are incredibly strong. But the future expansion is all about those star opportunities. Think edtech, biotechnology, and fintech. This signals a really clear shift toward an innovation-led export economy. So, this brings us to our final section. We can see the trajectory, we see the opportunity. Now we need to focus on the imperatives. What are the concrete actions that are required to secure this future? And this really is the fundamental question for policymakers and business leaders in both Canberra and New Delhi. The trajectory is clear, right? But how do you sustain this incredible momentum? Well, the answer really lies in systematically removing friction from the entire trade ecosystem. We're talking about everything from simplifying customs and harmonizing digital trade rules, all the way to modernizing logistics and deepening collaboration in high-tech innovation. Every single one of these steps is absolutely crucial to keeping this growth story on track. And let's just be really clear about the scale of this task. Hitting that $100 billion target is not a given. It's going to require a sustained compound annual growth rate of over 12% year after year. That demands constant focus and a real commitment to continuous reform from both sides. So, the foundation has been laid, the policies are in place, and the early results are frankly more than promising. The next chapter, and maybe the most challenging one, is all about execution. It's about turning that shared ambition into tangible, on-the-ground reality. The question is no longer about potential, it's all about pace.